Welcome to BigONE Weekly News Update. I'm Sophia. Cryptocurrency markets extended their rebound last week despite geopolitical tensions and tighter global liquidity weighing on traditional assets. While equities, metals, and bonds struggled amid rising Middle East tensions, Bitcoin continued to outperform many major asset classes, reinforcing its growing role in global markets. Crypto extends rebound as ETF inflows continue. Digital assets posted strong gains. Bitcoin rose nearly 10%, briefly topping $74,000 before closing around $72,800. Ethereum climbed about 12% to $2,180, while Solana gained roughly 13% to around $92. Bitcoin ETFs also recorded 5 consecutive days of net inflows, signaling renewed institutional demand. Since the latest Middle East conflict began, Bitcoin has outperformed the S&P 500, gold, and most major assets, even cash. Geopolitics tightens global liquidity. Rising tensions continued to pressure global markets. U.S. equities fell for a third straight week to 3-month lows, while gold and silver also declined. Treasury prices dropped for a second week, pushing yields higher. Meanwhile, the U.S. dollar strengthened to a 10-month high and Brent crude hovered near $100 after strong weekly gains. In times of geopolitical stress, capital typically flows into safe havens like oil and the dollar, tightening global liquidity. However, U.S. domestic liquidity remains supportive as the Treasury continues injecting funds into markets ahead of the April tax season. Strategies SDRC fuels Bitcoin accumulation. Strategies Perpetual Preferred Stock, SDRC, recorded a $745 million single-day trading volume last week, making it the most liquid preferred stock in the market. The product packages Bitcoin exposure into a stable yield instrument offering roughly 11.5% annual yield with monthly payouts, allowing investors to gain BTC exposure with lower volatility. Strong trading volumes have enabled significant capital raising, with last week's proceeds estimated to fund the purchase of about 10,000 BTC. Strategy has accumulated nearly 65,000 BTC so far in 2026. Institutional momentum builds. Institutional innovation in crypto continues to accelerate. BlackRock recently launched an Ethereum staking ETF, $ETHB, which distributes staking rewards to investors as dividends and surpassed $100 million in assets on its first trading day. Nasdaq is also working with the crypto exchange Kraken to develop tokenized equities, highlighting growing interest in bringing traditional assets onto blockchain infrastructure. TradFi moves deeper into crypto. Major financial institutions are increasingly integrating digital assets. Citi plans institutional Bitcoin custody services. BNY Mellon is expanding digital asset infrastructure, and Deutsche Bank is preparing crypto custody offerings. Charles Schwab is planning spot BTC and ETH trading. Morgan Stanley has filed for multiple crypto ETFs and plans spot trading through eTrade. And JP Morgan continues expanding blockchain initiatives, including deposit tokens and tokenized funds. Focus turns to the Federal Reserve. Markets are now watching the Federal Reserve's March policy meeting. Rates are widely expected to remain unchanged, with investors focused on the Fed's latest assessment of the inflation outlook. As macro uncertainty persists, the intersection between traditional finance and digital assets continues to deepen, signaling a structural shift in global finance. Join BigONE today and take advantage of the growing cryptocurrency market.